tutorial about using Quicken to manage your business account so that you don't have to pay for full-fledged accounting software, which tends to be more expensive than a personal software. We added a checking account and did some income and expense transactions, created some categories. Now I want to talk about asset and loan accounts. This is also important for you to track your business expenses and for reports for your accountant. This is maybe not as familiar to people as the obvious income and expense. Let's talk first about a loan. Why don't we say your farm bought a new tractor and you have a loan on the tractor and you also put a down payment on it? It's important that you record all of this correctly so that your accounts are accurate. And of course, a lot of people are using what's called bonus depreciation right now, which means you'll be able to write off your tractor in its entirety when you purchase it if you desire to do so. Of course, talk to your accounting. I'm not a CPA, but that is a possibility now. You could also choose to depreciate it over the timeline expected for the asset. Again, consult your CPA. Regardless of how you depreciate it, I'm going to just give a little demonstration on how you would add a loan and an asset in Quicken with a down payment. If you didn't make a down payment, it's pretty straightforward, but Quicken does not handle down payments on assets in a clean and easy manner, in my opinion. So let's just say you bought a new tractor. How do you put that in Quicken? You're going to go to Tools and you're going to add an account. And then you can link these accounts automatically from a lot of number of banks. I'm not going to do that for this example. And for your loan account, maybe it's in there, maybe it's not. I don't know if the agricultural banks are necessarily connected. So I'm going to do an offline account. And this is going to be a loan. I want to name the loan something very obvious, so I know what it's for. So I'm going to say it's a new 2026 Coyote tractor. Bought it today. And this is for a brand new loan. If you have an existing loan, then you would have to go ahead and get your statement if you want to add it in. But I'm going to pretend this is a brand new loan, and we're going to loan $25,000 at a 3% interest rate and 6 years to pay. And then it's going to calculate a monthly payment based on these numbers. Now, what I have found myself is that it never seems to match exactly right. Sometimes it's off by a few pennies, usually too little. And I think that's the way the APR is just calculated. So you may have to adjust your interest rate slightly, like put some decimal points in until it matches exactly what the payment is going to be. Now that's assuming you don't have any add-ons in there like insurance. This is the case where it's just interest and principal. You can play with the interest rate a little bit until the payment matches what you actually have on your statement. So I'm going to click next, and you'll put in your next payment due, and it shows you your first payment, what your breakdown in principal and interest is. Now, let's say sometimes some of these loans, you'll have an extra payment in there for insurance. Like for example, gap insurance, just regular insurance, maybe it's rolled into your payment. You could put it in this other category. I'm going to do it does add a layer of complexity. I'm going to put $10 in just because I want to show you how to handle this if that is your situation. Because again, something not incredibly intuitive. So I've got my loan there and I click next. One nice thing about Quicken is it'll put a loan reminder in, and I'll show you that later, how that works, but it really is a time-saving feature. You can even tell it to automatically enter it in the register. Let's say you have this automatically withdrawn from your checking account. Well, you don't even have to enter it. Just put this in and it'll automatically apply it to your checking account 7 days or however many days you want to do it before the due date. This is how modern software saves you time. So I'm going to click next. So I've got my tractor payment. Now, here's where the split is coming in. I'm going to click this split and it's going to show you, again, I got to click here. When I put it in here, it's going to show you how the first payment is going to split. So $317.24 is going to go to the principal on your tractor. $62.71 is going to go to your loan payment interest. And then it has this extra loan payment here, $10, which is not really categorized. You want to put this to the expense account associated with it. So if it was insurance, you're going to want to put it in an insurance account. Now, back to our other video with accounting. In this case, if you are mixing personal and business in this Quicken account, you probably want to create a new interest account that's just for business expenses and a new interest account that is just for business purchases, interest payments, so that you can keep it separate from your personal account. The other option is when you do buy Quicken, you can have as many accounts as you want. You can switch between accounts. So you could keep all your business stuff in one Quicken instance and have, if you want to track your personal in a completely different. So once I have adjusted this account here, I'm going to click OK. OK. And I'm going to click done. Oh, and also you want to specify what account your funds are going to be withdrawn from. In this case, my farm checking account. And I'm going to click done. Now it's going to ask you if you want to add a linked asset account. And you definitely do for accounting purposes, so that at the end of the year, you can give your accountant a balance sheet that is somewhat accurate. So I'm going to say yes. I'm going to add a linked account. I'm going to say other because it's not really a par, although that would be the second closest. So again, I'm going to put 2026 Coyote tractor asset. Now, let's say we bought this tractor for $30,000. So we're going to pretend that the depreciation the minute you take off the lot didn't happen. And honestly, you don't want to report it here. You want your accountant to tell you what your depreciation will be at the end of the year. So, but we bought this for $30,000. Our loan was $25,000, but we put $5,000 down. So the asset value is going to be $30,000. If you put the asset value as $30,000, you're going to run into trouble in a little bit when you try to apply your $5,000 down payment. So I'm actually going to put my asset value at $25,000. You'll see how this is going to change in a minute. So I'm going to click next. Next. Now, Quicken is going to create two accounts. It's going to create your loan account, which is a liability, and your asset account, which is an asset. Now, when we bought this tractor, we put $5,000 down on it. So I'm going to go to my farm checking account and I'm going to enter the transaction for that $5,000 down payment. Now, in your mind, this is an expense, but it really isn't. It's an asset purchase. So that $5,000 needs to be assigned to your asset of the Coyote tractor. Coyote, I don't know why I was going to call it Coyote. So I'm going to put in whatever your dealer's name was. And then the category, it's actually going to be a transfer. And it's going to be a transfer to the tractor asset. And we put $5,000 down and we're going to save. So now our checking account is reduced by $5,000. our asset account is increased by $30,000, and we still have our loan of $25,000. Now, when you do your taxes at the end of the year, your accountant is going to tell you what the depreciation is he took on that tractor. You would go to this account. Now, there probably isn't a depreciation category right now because this isn't set up as a personal. So the first thing I would need to do is add a category. The category would be depreciation expense. And I'm going to put it as a subcategory of my farm expenses. Okay, so let's say it's the end of the year and your accountant says, hey, we're going to do a 7-year depreciation, whatever that amount is. You would reduce this account with depreciation expense, and you're going to decrease this account. Let's just say it's $5. Now you may do the bonus depreciation, and your accountant may write off the whole 30,000. But that's how you're going to account for that depreciation. It's not the end of the year. I'm going to delete this transaction. If you make a mistake to delete anything, you click this more actions and click delete. Yes. So now that we have those entries, let's show you how you would grab what your accountant's going to call a balance sheet. Again, this is a personal software, so it's not quite as intuitive as if you're in a business software. But basically, you go to reports, and you're going to go to net worth and balances, and you're going to click on account balances. So now you do have to be a little careful because I have a personal account in here for $8,000. So you would have to take that out for your accountant. But if you notice, our assets are $30,000, our liabilities are $25,000, and then our overall total is $25,000, but really minus the $8,000. If you're mixing personal and business, you can always export any of these reports to Excel. And then you could actually just delete the accounts, delete the accounts that are no longer accurate. Now, this came in as a hard number rather than a sum. To sum, like let's say you had a bunch of accounts up here. To sum them, if you just click the auto sum, it will sum them up. And then here's my assets, here's that. And then your overall total, again, you would have to do the math here. Asset. So your multiple 17,000. If personally, if you're not going to do your personal accounts in here, which would be the best scenario, if you have the Quicken desktop software, you can have as many files as you want. So you can still manage your personal in a different account. However, this will not work if you don't have a farm checking account. If you're mixing personal and farm expenses, then you're not going to have a typical balance sheet. So it just depends how clean your accounts are, how much you separate, and what your accountant requires. But this is kind of why best practice scenarios you have a farm account versus taking everything out of your personal checking. Thank you for watching this video. If you have any questions, feel free to leave a comment or shoot us a message. We're happy to help you with your small business accounting needs.